Syngenta Crop Protection Canada and C&M Seeds present the Wheat School on RealAgriculture.com. We're joined right now by John DePutter of DePutter Publishing, based in London, Ontario. Welcome today, John.
Thank you, Sean. Good to be here.
John, a lot of the people that are, a lot of the farmers that are in the wheat market right now it's really difficult to kind of go through what's happening. You know, one day we read this, the next day we read that. Should I be bearish? Should I be bullish? Can you kind of provide us with a bit of insight into how we should be looking at the wheat market right now from a more of a deeper level?
Well, Sean, I think something that might help when we get into such wild, volatile markets as this, with all kinds of bullish and bearish fundamentals and conflicting news and difficulties making decisions, what I think can help sometimes is if we step back and also if we follow kind of a process. So I have some suggestions as to several steps to take that might help farmers make their decisions in these difficult, volatile times.
Okay, so what would be the first step, John?
Well, I think the first thing to do is just take a look at the charts. You can go to a company such as barchart.com and take a look at where the market has been, where it is today. Is it moving up, down, or sideways? What's the trend? That's step one. I would look at the charts. And I would say, as part of this step one, too, recognize that the charts aren't going to provide the answer, the holy grail, but they are at least a starting point. And if you look at the charts, you might say to yourself, well, I'm really not sure whether this is a good price or a bad price, but maybe I'll just sell an increment. We believe in incremental selling. So I would check the daily charts. And the second thing I would do is check the weekly charts. So this is step one. Take a look at the charts.
Okay, so should I also be looking at the monthly charts or just the daily and weeklies?
You can look at the monthly charts to get a 20 or 30-year perspective, and that is actually sometimes a good idea. I'm not sure that it's something you need to do every day or every week or even every month, but every now and then it's very valuable to get an opinion on where the market is compared to past years, because obviously things move in cycles, and an historical perspective is extremely valuable.
Okay, what's step number two?
Well, step number two, I would say, is take a look at the seasonal odds. And you might see or recognize that there are certain seasonal patterns for wheat. For example, the Chicago market often tends to rally in the February time frame as people worry about such issues as the acreage in the United States, crop conditions in the southern hemisphere, winter kill in the United States and other areas around the world such as Russia. There's often a rally in the April-May time frame before the wheat harvest begins to start. It's common at this point to get some weather nervousness going. And this is a common time too for old crop wheat to rally before new crop comes on stream. Then very often you get your harvest pressure, and after that a post-harvest bounce in around August, early September, and finally there is quite frequently a seasonal rally in October. These don't happen every single year, but it's common for the market to show these tendencies. The December Minneapolis future is just a little bit later than Chicago, but it has somewhat similar seasonal odds.
So John, when you look at these seasonal odds, you know, as you mentioned, you know, May, farmers are seeding, not a lot of people are hauling to the elevator. We've got harvest pressure, some of these seasonal rules. Has the involvement in hedge funds in the market, has it lessened these seasonal rallies or dips, or made them maybe kind of made them more prevalent?
It has changed them to some degree. However, I think the very nature of the market will require that these seasonal odds continue to exist to some extent. I would say that during extreme moves, extreme bullish and extreme bearish moves, the seasonal odds are less important and less reliable. Nonetheless, they will continue to underlie the market.
Okay, so what's step number three?
Step number three is take a look at the underlying fundamental supply and demand condition. You know, we get a lot of news these days, and short-term news can move the market up and down, but it's important to have a general understanding of whether wheat supplies are expanding or if they are lessening. Right now, for example, wheat supplies around the world are actually quite ample in relation to world coarse grain and world corn supplies.
Okay.
When we look at the fundamentals, John, I would also always take a look at acres for the future. This time of year, we're looking at prospective plantings in the United States. And in this regard, again, stand back and get a perspective on it. Where are wheat acres compared to historical averages, and that sort of thing. Sometimes you get too bounced around by the short-term news.
Yeah, so if we take that stand back and we look at this year's current situation, obviously we're hearing about a higher corn crop. Soys are trying to battle for those acres. Is wheat kind of the loser?
It is. Wheat acres seeded last fall, winter wheat acres were up a fair bit, but wheat acreage seeded in the United States is still quite low by historic standards. And we have to remember what happens in the United States is very important to the Canadian market, whether you live in Western Canada or Ontario or Atlantic Canada.
Okay, so when we step back with the perspective, John, where does weather fit into that?
Weather is always important, obviously. Indeed, it's often the most important factor. But the weather extremes for wheat tend to be a little less than for corn and soybeans. And this is partly because there's hardly a month that goes by where wheat isn't being harvested somewhere around the world. Wheat crop conditions in the United States are obviously one of the most important factors affecting Canadian prices. However, on a global basis, the weather in South America is important, Europe, the former Soviet Union areas, China, and Australia. So wheat tends to be a little bit less reactive to the weather than corn and soybeans, say, in the summer, when Midwestern growing conditions can make or break the soybean crop very, very quickly, and the corn crop even more quickly.
Okay, so we've got monitoring futures, we got check for seasonal odds, we've got underlying fundamentals. What's number 4?
Well, I think number 4, if I had a choice of a few of the very basic priorities to look into, I would like to know where wheat is priced in comparison to corn and other crops. Just lately, for example, wheat has actually been a cheap feed grain source for many people around the world in relation to corn. And this is causing more wheat to be used. And so it's always important to understand these relationships. Every once in a while, the markets get very much out of whack, like they did in 2008. But normally, over the years, you'll find that when wheat gets more than about 1.7 or 1.8 times the price of corn, it'll come back down to under 1.25 times the price of corn. Likewise, if wheat is so cheap that it's on par with the price of corn on a bushel-to-bushel basis, that implies that less wheat, more wheat will be used and less corn, and the ratio will correct itself, sending wheat up to a more expensive price level in relation to corn.
So where is that relationship right now?
The relationship right now is such that wheat is quite cheap in relation to corn. It's at one of the cheapest levels it's been in many, many years. And this is spurring more wheat usage. In fact, we hear all this talk about how corn demand has to be rationed because the supply simply isn't there in the United States. Well, one of the ways in which it'll be rationed is more wheat will find its way into feed rations. The price is right.
Right. Okay, so we've got futures. We talked a little bit about the cash price. There's one element missing, and I'm guessing that's number 5. What's number 5?
Well, number 5, you always want to be aware of the basis. And in Western Canada, the basis is very difficult to analyze because the Wheat Board, for its pricing programs, posts a rather arbitrary basis. In Ontario, one can sit down and take a look at some of the local supply and demand factors, the Canadian dollar, and you can look at the wheat basis in relation to where it's been historically, and you might determine that you're looking at a very good basis, which is a plus sign to go ahead and make a sale. On the other hand, when the basis is poor, you may want to avoid selling your wheat, or you may want to sell with a hedge instead of a cash sale. So John, it's always important to check the basis fundamentals.
John, do you find a lot of times that farmers misunderstand the role that basis plays?
I think most farmers are pretty sophisticated, and most advanced modern day farmers are pretty much aware of the role that the basis plays. I do think it is an important component of marketing, but not the only one. Sometimes you have to hold your nose and accept a poor basis if everything else looks right for a sale.
Makes sense. Okay, John, what's number 6?
Well, number 6, I think, is just simply check the profitability. I get a lot of calls from a lot of farmers these days, and many of them will say, where do you think the market's headed? Is this a good time for a sale? Should I sell now or 3 weeks from now, etc.? And a lot of this, Sean, just comes down to profitability. If the price is right, if it looks good for your own business, for your own operation, it's reasonable to make an incremental sale. These days, there are some pretty significant profit opportunities on the table, and I'm never going to be one to talk farmers out of accepting a strong profit on an incremental sale, regardless of some of the messages that might be coming from the market.
Profitability is good. So from an acre standpoint, obviously in Ontario, winter wheat is, the winter wheat is seeded. In the West, a lot of farmers are just about or trying to get started planting. Some late decisions are still potentially going to be made. Where does wheat fit in the profitability scheme for 2011?
Most producers tell me it looks pretty good, Sean. I mean, this is going to vary from operation to operation, but I think the prices on the table these days are better than many farmers ever would have expected 2, 3, and 4 years ago. And from my standpoint, we have felt that it's been very important to encourage producers to get some new crop wheat forward contracted if you're comfortable with your ability to deliver. So depending on the farmer we're talking to, depending on the area we're talking about, and other variables, our recommended position might be anywhere from 20 to 40% sold on new crop wheat at this time. And some people who like to become more involved in the futures markets may also hold some hedges.
Okay. And finally, number 7?
I always like to look at the carrying charges in the market. The wheat market lately has shown a very strong carrying charge. That means deferred futures are way above nearbys. This sets up an opportunity for, when you do make a sale, to look at making a deferred sale, a sale that'll be made fixed now, but for deferred delivery. There are also opportunities out there for hedging not only 2011 crop wheat, but 2012 crop wheat that people may want to take a look at based on the strong deferred futures markets over the nearby.
So how should one evaluate those, whether they should carry and deferred? Is it basically just I'm going to get paid this much more per bushel if I wait 3 months?
It is to some degree. Some farmers would look at the deferred market and say, well, I'm going to hang on because the price for the market's telling me that the price is going to be even higher 3 or 4 months down the road. But the fact is that carrying charges tend to erode over time. So that so-called carry in the market is likely going to erode somewhat. It's going to lose its big premium over the cash price over time. The cash price of wheat has to move pretty strongly higher over the next several months if it's going to meet the high premiums that are built in to the deferred futures market.
Okay. So in terms of marketing, we kind of had 7 steps here. Just to kind of review, we had monitoring futures, number 1. Number 2, check the seasonal odds. Number 3, underlying fundamentals. 4 was wheat's relationship to other crops such as soybeans or corn. 5 was the basis. 6 was profitability. And 7, looking at the carry. So in your mind, John, are all 7 of these equally important, or is there 1 or 2 that stand out above the others?
These days, Sean, I'd probably put profitability at the top of the list. But that's going to vary depending on the individual producer and how the individual producer wants to rate these various factors.
Okay,
You're
John.
always going to get conflicting factors too, Sean. It's very seldom all of these are going to line up 100%, and it's easy to know what to do. That's why we tend to lean toward an incremental sales program.
Right. So when you say, just let's finish up there, John, with incremental sales. I know you're a big proponent of incremental sales. I am as well. When we talk about incremental sales, are you talking like 5% of the crop at a time, or are you talking like 20 to 25% at a time?
I like to make 20% sales. Otherwise, you're just constantly involved with the markets, and you might run into logistical issues, and you might see a set of signals that make it important to sell. And when you do sell, you want to make that sale worth something. A 20% increment is worth something. 10, 15 maybe, but no less than that.
Okay, John, thank you very much. John DePutter is with DePutter Publishing, based in London. Check him out on his website, and I really encourage you to check out John's analysis. He's a very good analyst. So, John, thank you very much for joining us today.
My pleasure, Sean. Have a great day.